Goldfinch is a DeFi protocol on the Ethereum network backed by Coinbase Ventures. In the last 6 months, the price has rocketed by over 1,000%. But has it got the legs to be a top 100 cryptocurrency? Well, today we're going to look at the technical viewpoint of what's likely to occur over the coming month from a price perspective. My name is Jagir. I'm featured in the best-selling book, High Probability Trading Strategies, back in 2008. Having traded the markets for over 15 years, I'm going to give you my expert opinion based on the technicals. So with that said, let's dive straight in. When we are looking at any market, we need a methodology to read the buying and selling psychology. And by far, the best that I've ever found over the last 15, 20 years is Elliot wave theory. So the basics of Elliot wave is markets tend to move in a 5-wave structure in an impulsive trend, followed by a 3-wave correction. There's 3 main rules. One of the rules is wave 2 cannot go beyond the beginning of wave 1. Wave 4 cannot trade into the range of wave 1, and wave 3 cannot be the shortest. Now, this was studied over hundreds of years, and it just tends to work more often than not. Around 60-70% of the time, the markets have a clear pattern. And this is what we're going to use to look at GFI, which is Goldfinch. So let's start with this. So where is GFI in this perspective? Well, I believe we're at this phase of a 5-wave cycle. We've had this nice move up, a correction, a very impulsive move up, and we look like we're going through what's called a wave 4 correction. So let's now label that on the chart on the right-hand side, which is the live price data for Goldfinch. So we've got this nice move up, we call this a wave 1. This is a nice correction, pretty textbook. And then we've had this really impulsive move, typical of a wave 3. Wave 3s are more often than not the most impulsive, most aggressive buying out of waves 1, 3, and 5. And remember, wave 3 just cannot be the shortest. Typical behavior is then a wave 4, which again cannot close into the range of wave 1. So we're anticipating somewhere down here, followed by a wave 5. Now, if it unfolds like this, which is more than likely, never guaranteed, but more than likely, you can get some real feel for what are the price ratios that are likely going to occur. And that's what we're going to go over next. So the next thing we're going to cover is what is the typical time for a wave 4 to complete and the typical price. So let's start actually with the price. So we're going to do something called a Fibonacci price retracement. I'm using closing data because it's just cleaner for this example. And the typical minimum for a wave 4 is 38.2%. In other words, more often than not, the price will come back down to test this point over here. So the price of that is $3.67, thereabouts. So we can be relatively confident that we probably haven't completed the wave 4 yet. Now, should we be confident that the wave 4 has begun? Well, I would say yes. And the reason being is we have something called an overbalance of price. So this initial move to the downside is bigger than any other move to the downside in this whole upward sequence. That's called a break-off structure. So it means there's the biggest amount of selling that's occurred in the market since this upward movement. So we're more than likely making a wave 4. But price is not good enough. We want to also look at time. How long does it typically take for a wave 4 to complete? So I'm going to show you on the left-hand side in the theory example first. If we take the beginning of wave 3 and the end of wave 3 and we measure how long did that take, and then we project forward 38.2 and at 62%, we'll get a time zone. And then when we can coincide that with a price zone, we can literally draw a box. And more often than not, the price will fall into that box pretty accurately, and that will allow you to really go, when is the market likely to take off for a wave 5, if that wave 5 does indeed occur. So let's now take the beginning of this wave 3, the end of this wave 3, what looks like to be the end. We can be pretty confident with that. And we've got these two ratios. Again, 38.2 and 62%. I like to draw a nice box, so it gives me a very clear visual. I will also put a question mark here, just for good practice. The reason being is this wave 3 is not confirmed, but it's highly likely to be the wave 3 top. Again, I say highly likely because we've come back down into this wave structure. It's a pretty big move to the downside, and it looks pretty obvious. So what are the price points? Well, again, $3.67, but what are the dates? Well, the typical minimum, and hear my words correctly, typical. So we can never say what the market is going to do. We are just looking at what is highly probable. The typical date should be a minimum of the 27th of April to the 12th of May. So we're talking about 4 to 5, maybe even 6 weeks of sideways to down. And the most common behavior is some type of A, B, C structure. There's another Elliott wave guideline, which can be very, very helpful. It's not a rule, but it is a guideline. And the guideline is when wave 2 is more sideways, wave 4, because these are both corrections, tends to be more sharp. And we can see that right now happening. Like wave 4 right now is almost pointing directly down, whereas the wave 2 was pointing this way. And the reverse is true. When you see a sharp wave 2, the wave 4s will then tend to be sideways. They tend to alternate between each other in this way. So let's now look at what should we anticipate. So we're going to do a couple of things now. We're going to do a lower degree wave count. What do I mean by that? Well, when we're looking at this looks like some type of wave 1, wave 2, wave 3, wave 4, wave 5 of a wave 3. So it's called a lower degree wave count. This can be helpful to help pinpoint. I'm just going to draw it like so you can see it a bit differently. I'm going to get rid of the line so it's just a bit cleaner to see. This can help us pinpoint, the end of a wave 3, but then we want to do the same for a wave 4. So because we have not reached the minimum time and we're close to the minimum time, price, we can look at this as the first leg down of the correction, but it's unlikely to be complete. It could be complete, but it's unlikely to be. We're probably going to get some type of leg up. This will fool a lot of people. We call this a wave B. And then we're probably going to get another leg to the downside. So there's typically at least 3 legs to a correction. So what does that look like on a lower degree wave count? Well, more likely is going to be some type of wave A, wave B, and then wave C. That's the most common and frequent. And again, I'm just going to draw this as a lower degree wave count. I'll leave the lines on and I'll draw it like so. So we can see it like this. Let me see if I can get this just a bit more accurate like so. So that will be my take. So now what we're going to do next is some projections of where is the price likely to go if this occurs. Now, best practice is wait for this to occur. If it does occur, then look for long trade setups or buying signals to take advantage of the market. But for the sake of this video, we're going to look ahead in time. If this happens, what is then likely to occur? And then the left-hand side shows us after a wave 4, we typically get a wave 5. And wave 5s, sometimes they are the longest wave. Not that frequently, but in crypto, they can be because of FOMO and fear of missing out and that euphoric buying. Because ultimately, if you ask yourself the question, why are you buying Goldfinch? And why do people buy crypto in general? Well, yes, there's a use case, but most are buying for speculative reasons. And that's what ultimately drives the price, buying and selling behavior. So let's now go into the price projections. But before I do, quick mention of my new free masterclass. If you want to learn how to do technical analysis yourself, Elliot wave theory combined with Fibonacci price, combined with Fibonacci time, and with momentum, because they're 4 independent technical factors, it will give you a nice technical edge on the market, and you can make logical buying and selling decisions on the market, when to take profits, etc. Is in the description link below. You can take my free masterclass. Putting over 100 hours of work into this, and you're going to get some real value from a technicals, but also other angles when you're looking at just trading in general, but also not just looking at crypto. There's other markets that abide by these rules that we're looking at today. All right, with that said, let's finish on the projections. So what we're going to need to do for me to be able to forecast is we have to make an assumption that this is where the wave 4 completes. We don't know that right now, but let's just make that assumption right now. We're going to just use this as the target point. And if it does occur like this, there's typical buying and selling behavior for wave 5s. And I'm going to just give you two. What is called an external retracement. So I'll do it on the left-hand side first so you can really see it clearly. Because you can apply this to all markets and all time frames. We're going to measure wave 4. How big was this move? And we're going to do something called an external retracement. Now, these are really reliable for a nice price zone for a wave 5. And then next, what we're going to do is we're going to measure wave 1 to wave 3. We're going to measure this. And then we're going to project from wave 4 3 ratios, which again are really reliable. And what we're looking for are clusters. In other words, where the different buying and selling behavior ratios, they overlap. And that makes it a much more significant resistance zone that you can rely upon. And if the price does go to those, and we do make this wave 5, you want to be aware of them to maybe lock in some profits and avoid buying at the extremes, because you want to be buying at the end of a wave 4 so you can ride the wave 5, as opposed to selling at the end of a wave 4 and buying at the top of a wave 5. That's typically where most people get caught out. So with that said, Let's start with the external retracement. Again, take this with a pinch of salt. I'm just, this wave 4 is not complete and it has not formed yet, but it looks like it is forming. So the external retracement is 1.618 and 1.272. So we're fairly confident that this is likely to occur. I'm also just going to remove this retracement so we can just see it a bit clearer. I'll also remove this and we'll just keep the pink box. So it just makes it a bit clearer of what we're aiming to do. The next one I said was we're going to measure, again, we'll do it from here. We're going to measure the beginning of wave 1 to the end of what looks like to be the end of this wave 3. And again, we're using closing data because there were some pretty extreme bars on the bar data. And then we're going to take it from this anticipated wave 4. And the three ratios that I really want is 38.2%. We can see it falls under the wave 3, so that's not that valid right now. 62%, and we can see it falls right into that range. And the 100%, which is typically the extreme. Now you can see it's just slightly off the chart, so I'm just going to bring it onto the chart so we can see it over here. And now we have a price zone for if a deep wave 4 occurs. And again, if it's more shallow, these numbers will need to be altered. But we can get a feel for typical buying and selling behavior, $6, $7. And if it overextends to $8.32. Now, if it goes beyond this, there are a few other things that we can do to look at this. But another key factor that we want to be aware of is, let me just draw it here on the left-hand side. When a wave 5 takes off, we typically see it break down into a 5-wave structure in itself, like so. And this can help us further pinpoint the end of a wave 5. So we never want to use one of the technical factors by themselves in isolation. That will give us an okay edge, but not a great edge. But Elliott wave theory in conjunction with Fibonacci price, in conjunction with Fibonacci time, and in conjunction with momentum, now you got a strong technical edge. And if all four independent technical factors are suggesting the same thing, then you can be fairly confident that the market is likely going to reverse. And then we can just be patient for something called a pattern reversal signal. I'm going to finish with some time cycles. We're going to do something called a high to high to high. So the markets typically move in rhythms and cycles, and there's buying and selling rhythm cycles. And we can assume that the cycle or the rhythm is going to continue. So we've got this high for a wave 1, we've got this high for a wave 3. So we go high to high to high. So we're going to project from here to here. We're going to measure how long did that take, and we're going to project forward the next date. Then we're going to also use how long did it take for this wave 1 to form, and we're going to project it from wave 4. How long did it take for this wave 3 to form, and we'll project it from here. And then we'll have a minimum of 3 timelines, and then we can get a feel for how long is it likely to take for the wave 5 to complete if this wave 4 unfolds like this. Now, I am jumping ahead of myself because in the ideal world, I would wait for the wave 4, wait for pattern reversal signals and confirmation in terms of pattern price, time, and momentum, and then make a buying decision. And then if the trend takes off, we'll be doing this. But I'm just doing this ahead of time. So if this does occur, you have the tools that you can utilize to look at the market. So let's do this high to high to high. And what we want is the 100%. And again, we can see it's just slightly off the chart. So I'm just going to bring this data in like so we can see it over here. Because we are talking about, August over here. So that's the high to high to high. I will show, in fact, we want the wave 4 confirmed, so we won't do one of the ones I was thinking. We'll do how long did this wave 1 take to form and project it from this potential wave 4. How long has it taken for this wave 3 to form and complete? And we'll project it from this potential wave 4. And now we can see we've got these timelines. Now we've got this nice date over here. I'm also going to put in the 2.618. 2.618, it'll probably be just slightly off the chart over here. This is like an overextended wave 5. So what this does is it gives us 2 price zones down here, time zones as well, and up here. And the big clue is how does the market unfold? So if the market unfolds like this, I think we have a big wave 1, a wave 2, and we have a big wave 3, and then a wave 4, well, then it's likely going to reach this zone. So the typical thinking is, from buying and selling psychology perspective, let the market communicate to us if this price zone is exceeded with confidence, then it's likely to go to the next zone. That's that's more often than not the case. And the same is true with wave fours. Is like if there's a wave four projection over here and over here, and the price exceeds this with confidence, then it's likely going to get to the next one as well. So there you have it. That's the technical analysis of GFI. If something else changes, I'll do an update as well. Make sure you subscribe to the channel because I'm going to be doing a lot of technical analysis on different coins, just really to help paint a roadmap. And it's 70 to 90% accuracy in terms of it tends to unfold. And if it doesn't, we can see why it's not going to, and then we can reevaluate the market pretty fast. GFI was a token that you guys asked me to do. So if there's a coin that you want me to look at that's in the top 250 or top 300 coins, let me know. If it's doing an interesting chart pattern, I'll take a look. And if I think it can add value, I'll do a video. So until then, I'll see you next time.